Hello, my name is Todd Doleshal with Elevated Retirement Solutions. During today's investing class, we're going to be discussing the projected sector growth outlook for the next decade, and then also taking a look at lessons from projections from the past decade as we look for ways to shape and help our portfolios as we continue to grow. And as always, of course, disclosure here, anytime we're talking through any specific investments or ideas, this is not meant to be actionable investment advice and purely for educational purposes only. So with that, well, let's get started. Okay, so to set the agenda for today's session, we're going to be discussing the fastest projected sectors, why they are projected to grow the fastest, discuss some possible options for investing in them, whether we're talking about passive index funds, ETFs, and leading companies, projections that happened versus what did happen in the last decade, and then implications for all this. So thank you for listening to this video here, and let's go ahead and get started. So in terms of discussing the fastest projected growth, to define this, we're going to be talking about a term called CAGR, or compound annual growth revenue. So that says is these are the companies that are projected to grow the fastest on an annual basis, as well as different options in terms of how to get into them and investing. And as always, there's no guarantee that anything that you invest in is going to gain money. Losses can occur, and it's all about how you use this. So make sure when we're talking about this that we look at this from a more of a diversified strategy to help reduce risk, but that certainly does not eliminate it. Okay, so now when it comes to the fastest projected growth sectors, at the top of the list, probably not a huge surprise, is artificial intelligence. According to Microsoft 365 Copilot, which is provided by LPL Financial, my broker-dealer, along with other sources I've looked at, artificial intelligence is projected to grow the fastest, followed by advanced mobility, hydrogen fuel cells, biotechnology, fintech, which is short for financial tech, cloud computing, and cybersecurity. And logically, as we look at this at the end of 2025, makes sense. A lot of these sectors have been in the headlines a lot. Companies are spending incredible amounts of money on these here. And again, as we look at this, really interesting to see what the projected growth is for this. Now, when it comes to ways that you could potentially get into these, if you're managing your investments on your own, again, not saying that these are recommendations, but some examples of leading companies in the artificial intelligence space is NVIDIA, the largest publicly traded company in the world. As I record this video in November 2025, produces semiconductors and chips that power the infrastructure for AI, along with a lot of other key computing issues there. Microsoft and Alphabet, which is better known as Google. When it comes to this, all kinds of different ways to get in. And if you're looking for index or passive exchange traded funds, or ETFs for short, one that you could consider would be the Global X Robotics and AI ETF called BOTS. These are all investments and potential investments that I'm monitoring for my clients behind the scenes to try to figure out if this is something that we should be looking at and when, with the idea that we want to buy low and sell high, right? Because word is certainly out on these sectors, right? And that's why they're trading at very high multiples of price per earnings ratios compared to the broader sectors. So proceed with caution when looking at these. When it comes to advanced mobility and transportation, leading companies, not surprising here. First one is Tesla. Obviously, Tesla is one of the first companies in the world to really create a company that is going to allow people to travel from coast to coast using an electric vehicle, which before they set up those charging units, to my knowledge, just was not possible. So just really fun to see this all play out here, to see the ups and downs of the market based upon projections here. And it's kind of interesting that the next one really surprised me, which is hydrogen fuel cells. So when it comes to hydrogen, it's a different alternative energy source. I'm certainly not a chemist or physicist, so I can't speak to the efficiencies there. But some good opportunities certainly for diversifying, knowing that the world, and especially the United States, needs energy to fuel all the things that are on this screen here, whether it's artificial intelligence, vehicles, cloud computing, that all requires power in one way, shape, or form. And given all the restrictions out there that come and go based upon administrations, diversifying our energy and infrastructure supply probably is a good thing in the long run. And then lastly, of course, cloud computing, right? So Amazon Web Services is one that's a huge leader in that space. Microsoft Azure, Salesforce, and then there's different ETFs that you can look at, like Sky and others that are out there. But again, as with anything on this screen here, proceed again with caution. All these are sectors that I'm looking at behind the scenes and monitoring very closely to see if and when it makes sense to invest in these firms. And as many of you know, who are clients of mine who might be attending this, I've already taken action on a number of these firms inside your portfolios. Now, when it comes to fundamental drivers of this, expending money on growth and artificial intelligence and data centers and CapEx, as it's called, capital expenditures, that does create growth in of itself. Now, whether that generates returns that are profitable businesses down the road, that's really the million-dollar question, or in this case, multi-trillion-dollar question, right? In terms of how these companies are being valued right now. But it'll be certainly interesting to see as we go forward, right? Because AI and artificial intelligence really is here to stay. It's being embedded in many tools that we use, including our phones, web services, internet browsers, right? There's, of course, apps for that that all come into play there. So it'll be very interesting to see over the next decade where AI takes us here. Advanced mobility is an interesting one because that could potentially solve a lot of the urban congestion problems. I was blown away to see recently that now there's landing aircrafts and autonomous vehicles that are being developed, and certainly not at scale yet for mass production, but very interesting to see the research that's going on in this space here. It makes me think of those sci-fi movies that we might have grown up on as kids and still see to this day. Hydrogen fuel, already mentioned this, but it does, and from what we hear, does create a very interesting option here for fuel cells. That's a lot more energy efficient and great for storage and helps us move away from fossil fuels, which may or may not be the right strategy from that perspective in the long run, but certainly interesting to see where that all goes here. Interestingly enough, one that I haven't touched on yet is biotech here. So biotechnology and gene editing and the biohacking, as it's oftentimes called, is certainly starting to take hold in a big way, especially at the higher end of expenditures in healthcare there. But as it stands now, certainly it's got a long way to go to become mass available and at affordable scale. Financial tech or fintech, that's where we're talking about different types of systems, whether it's payment programs, blockchain technology, which has applications in the crypto world, healthcare potentially as another user there, automating financial services payments with banking, increasing access, reducing costs, and just becoming more efficient, which is, of course, always the key. But then layering all this in would be cybersecurity. Now, cybersecurity really threatens every sector practically, especially when we're talking about anything that's connected to the internet, which it's hard to think of many industries that aren't nowadays in some way, shape, or form. But security is an area that does continue to weigh heavy on people's minds as we look at it, but we'll see how that goes in the future here. Now, when we talk about this, again, word of caution, that's why I paired this section here together between what we project is going to happen in the future versus what actually did happen and looking back. So always take projections with a grain of salt, right? So number one on the projected growth list was healthcare in 2015. And turned out that biotechnology, which was more specific, was the fastest growing sector in the United States as measured by compound annual growth rate over the last decade. Renewable energy, that very, very broad, right? Solar, wind, electricity, power, so on and so forth. And it turned out to be a lot more specific electric vehicles, of course, in big part by Tesla, and now and other firms, of course, that are coming out of China. They're really helping to bring the cost down in efficiency for competition here. Cloud computing was one of the top ones that grew: e-commerce, financial tech, cybersecurity, and artificial intelligence. So artificial intelligence went from the bottom to now being the fastest projected growing area over the next decade. And as with anything, again, we'll see whether these projections in the future are actually going to happen or not. Oftentimes we see variations of this, but it is interesting to note that 5 out of the 7 projected sectors that were projected to grow the fastest over the last decade did end up happening, whereas 2 were a lot more broad and a lot more specific than originally thought in renewable energy and healthcare. Now, when it comes to this, really 3 critical lessons I think are important to share is while forecasters have definitely correctly identified AI as the fastest projected growing area over the last decade here, it is interesting to note that there's that herd mentality as well, right? Whereby we see an investment that goes up, we hear about it a lot in the headlines, and that tends to pour people into that fund or that strategy, that stock, etc., which could potentially create bubbles. So really important that we monitor key fundamentals in those companies to see what's actually driving that growth. Is it the company's making more money, acquiring customers, or is it purely because people are investing in that firm, which is bringing up the price, which all things being equal creates a pretty risky situation. Another option is that if you're not comfortable investing in any one particular firm, if you're investing on your own, consider broad diversified passive ETFs. ETFs can be a great way to diversify amongst a basket of securities. You can go rather broad, like the S&P 500 or all world indexes, or very narrow, like we were talking about, with very specific sectors and even overlapping a few. But as with any ETF, again, just look at what's actually inside that ETF to make sure that it is what it says it is, because oftentimes when we peel the onion back, so to speak, what's actually inside those companies can be very misleading for what the title of the index fund is, or certainly a mutual fund. And disruptive technologies can definitely exceed expectations dramatically, right? As we start to look at this. So think about the smartphone when Apple invented that, right, with the iPhone, right, and all the things that we do with that going forward. But it'll be interesting to see if we're even still using smartphones as the main driver from a technology and hardware platform over the next decade. There's a lot of companies that are starting to pour resources into different ways of doing business so they can capture that data and that software and have the markups that Apple does on their apps. So certainly will be interesting to see as we go forward what happens with that, and certainly AI's integration with other technologies like electric vehicles, cybersecurity, office efficiency, so on and so forth. But with this, of course, my disclosure here is when investing, there's no short-term guaranteed solution that's going to grow at a very high pace beyond what cash does. So always, when we look at this, always say never and never say always. Really important that we do monitor the underlying trends in this, not putting too much into any one stock, and make sure that we balance with a vision of market volatility management, meaning if we're retired, pulling money out every month from our accounts, probably doesn't make a lot of sense to put 100% of your portfolio into one stock, right? Conversely, if you're still needing a good amount of growth in your portfolio, probably doesn't make sense to put it all in cash, right? Because then we have the inflation problem, right? And the lost opportunity cost of having your money work a lot harder for you, right? So working with a professional, doing your own research and your own due diligence, combination of both, can be a great way to look at this from all kinds of different angles here. Now, when it comes to this broad thematic exposure, because let's say we're investing in semiconductors as an example, Rather than putting it all in one company, you can buy an ETF that invests across the majority of large publicly traded companies in that one sector. So you get essentially a situation where rising tide raises all boats if you're not comfortable picking individual stocks. And rapid tech sector growth can exceed projections as we go forward. Those numbers that we shared there from Microsoft's Copilot could be higher, right? It could be a situation where the earnings growth does exceed 30%, maybe even 50%. Who knows, right? But as with anything, when it comes to economics, there's a balance of supply and demand. And oftentimes when we see incredible growth, that is going to attract more and more competition. That's how the free markets work, all things being equal, especially at the international stage beyond just the US. And competition does, all things being equal, typically reduce prices and increase efficiency for these organizations competing for that business in a highly lucrative area, especially when it's an emerging field. So it'll be interesting to see as we go forward what ends up happening here. But again, as with anything, the investing implications around this is to really try to get out of the game of market timing and security risk, meaning we don't want to be in a situation where we're trying to time the market day in and day out. Don't want to have too much exposure to any one individual stock there because that can create extra volatility and risk that could be simply diversified out if you were to buy a broader index fund, wait and hold for a long period of time here. So it'll be interesting to see where this all goes here. So four key considerations or takeaways for client portfolios. Diversified exposure for thematic ETFs can be a great way to invest in an emerging field or one that you think could be an emerging field. Monitoring those trends and policy shifts, because oftentimes when we're talking about new fields, they rely upon government subsidies, tax breaks, investment R&D, grants, so on and so forth. So it'll be interesting to see as the governments and administrations shift back and forth, subsidizing or even being an adversary to certain sectors, how that impacts those markets there. Aligning with macroeconomic trends is also really important. So macroeconomic means big picture, macroeconomics between supply and demand. So again, as we go forward, all things being equal, more and more people every decade in the world, all of them need power, they need consumption energy, we all need food, and those companies that can serve those basic needs at scale and at a profit stand to benefit the most potentially. And then being agile and responsive is also really critical, right? So the more aggressive and the more specific you are in building your portfolio, that could cause some issues, right? So there's unique things that you can do, which is called a stop loss for individual positions. You can rebalance, which is where you lock in the gains from the holdings that have grown the fastest and turn around and buy what's sold off by rebalancing and repositioning back to its original holdings, which could be one great way to diversify and manage your portfolio there. Both those come with pros and cons, right? Because you don't want to rebalance too frequently and miss out on the growth of any one sector. But again, someone's age, risk tolerance, income needs, and existing holdings will all shape this all together as a part of your diversified portfolio and financial plan, ideally when paired together. So when it comes to excuse me, questions around this, there's all kinds of ways to look at this and certain nuances of AI. Just taught the class right before this. I'm recording this video recapping. There are a lot of great questions around applications around military and international trade and tariffs, which have been in the news a lot in 2025. So it'll be interesting as we go forward what the risks are. And until we actually get through that period of time, all risks and concerns can't be known until we get to a hindsight situation, right? So again, having a diversified portfolio can help reduce risk, but certainly not eliminate it. And when in doubt, getting different opinions can help so that you're not simply acting upon one headline or one idea to make or break your financial plan and your investments. So with that, thank you so much for listening to today's recap video here. Really great State of the Union discussion as we look at projections for the future, taking them with a grain of salt, but also looking at where the potential opportunities are as you look to make your money work as hard as you are. So ideally, you can live on the interest and growth from your portfolio. And again, everything we discussed today is purely for educational purposes only, not meant to be taken as specific investment advice for any one individual and/or organization. Thank you, and look forward to seeing you on the next session.